the time of recording this video, Tesla stock is up over 5.5% today. Currently trading about $208 per share. What's going on with Tesla and why is today so important? In fact, it's pretty rare to see Tesla break above the 200-day moving average, especially heading into a major catalyst, which is tomorrow morning's delivery numbers for Q2. So there's a bunch of different reasons for Tesla's massive outperformance and big green day today, but this is probably the biggest one of them all. This article from investing.com says there's Chinese and Li rise on deliveries data. NIO announced they delivered 21,209 EVs in June, marking a 98.15% increase from the same period last year. This included 11,581 SUVs and 9,628 sedans. For the second quarter, NIO's deliveries totaled 57,373 EVs, a 143.9% increase year over year. Li Auto reported June deliveries of 47,774 EVs, up 46.7% from a year ago, and second quarter deliveries of 108,581 EVs, up 25.5%. Meanwhile, XPeng posted June deliveries of 10,668 EVs, a 24% increase from last year, and second quarter deliveries of 30,209 EVs, up 30.2%. So simply put, Tesla's competition in China did very well last quarter, and that's a good sign that Tesla probably did very well in China in Q2. And it is being officially reported via Tesla China's Weibo page that China's sales have hit a new high in June. Sawyer Merritt says, just to be clear, I think Tesla China is referring to sales in China in the month of June, not company sales worldwide, and new high could also be lost in translation. But judging off of that post on China's Weibo account, it sounds like June was a new all-time high for Tesla deliveries. But again, that could be lost in translation. This article from Barron's today says Tesla stock cracks $200 ahead of deliveries. What else is moving the stock? This article goes on to say that Tesla typically reports quarterly global delivery results on the second day of a new quarter. For the second quarter, the most current Wall Street estimate points to about 420,000 cars delivered, down from some 466,000 delivered in the second quarter of 2023. Deliveries likely fell year over year for the second consecutive quarter. And there's really two important things to point out there. Yes, the stock is priced for a decline on a year over year basis for deliveries. We already expect that. But with the latest estimate being 420,000 deliveries, there's probably room for an upside surprise there. And as per my estimates, you could come in around 440,000 deliveries. And that would be seen as not as bad as feared. And that would be positive for the stock. When you also look at deliveries on a month-over-month basis, or quarter-over-quarter basis, that last quarter came in at 386,000 and potentially coming in as high as 440,000 for Q2, then you start to look at some impressive quarter-over-quarter growth. The third aspect that I would like you to consider is this narrative that maybe this is the trough, maybe this is the bottom, and things start to improve from here for Tesla. It's easy to look at hindsight and say Tesla's been cutting prices, margins have not been that great, or deliveries are not coming in with a year-over-year positive number. But it's more important what is going to happen next for Tesla, what those expectations are going ahead. And I think this could be a trough for Tesla deliveries, and things can perceived get better from here. And that is something Dan Ives has been saying over the past couple of days. And that is probably what is helping to boost Tesla stock today. And again, Tesla stock breaking above that 200-day moving average, heading into a big catalyst like Q2 deliveries tomorrow, is a pretty good sign that Wall Street is positioning for an upside surprise in Tesla deliveries, and they think the stock's going higher from here. And we will ultimately see what happens. Currently, Tesla stock is over $210 per share on some very high volume. It's possible Tesla stock closes down a lot more than where we are currently at, we'll have to wait and see. And by the time you guys see this video, Tesla could be a $215 stock, or it could be a $203 stock. We'll see. This move in Tesla stock comes in spite of a bearish report from Wells Fargo's analyst Colin Langan. He wrote Monday that 2024 delivery estimates for Tesla are too high. He expects about 1.6 million cars sold this year, while the Wall Street consensus compiled by FactSet is for about 1.8 million units. He says slowing demand raises the risk that Tesla will keep cutting prices. Langan rates shares a sell and has a $120 price target for Tesla stock. And this just shows how far behind the curve Wall Street really is on Tesla. Like, guys that actually cover Tesla for a living do not understand Tesla is not in the market to be cutting prices anymore. Tesla instead has adopted a strategy of buying down the interest rate. Yes, it still costs Tesla money to buy down the interest rate, but that is better than cutting prices. Why? Because every time Tesla cut prices in the past, it gave you a slight boost in the next couple of weeks to deliveries, but it did not do much. Based on Tesla and the data that we can see from Tesla actually buying down the interest rate, that is actually fueling some significant demand for Tesla. That is actually helping Tesla deliver more vehicles, whereas cutting prices did not. So again, the problem was never Tesla was cutting prices. That's not what Wall Street really despised. Yes, it's not great, but it was the fact Tesla was cutting prices and it was not boosting demand. If Tesla's price cuts were boosting demand and causing more cars to be sold, that wouldn't be such a problem. Well, Tesla buying down the interest rate, causing more Teslas to be sold and delivered, that's actually a big net positive. This article goes on to say the recent price action and the Monday bounce tells investors that to some extent other factors are more important right now. One factor is Tesla's August 8th Robotaxi event, where the company will detail plans to capitalize on its full self-driving software and technology. CEO Elon Musk has called self-driving cars a multi-trillion-dollar opportunity, to which, based on recent trading, has excited investors. Quote, "We believe the August 8th Robotaxi Day will be a key historical moment for the Tesla story that we see as a near-term catalyst," wrote Wedbush analyst Dan Ives in a Friday report. "Ultimately, the key to reaching a $1 trillion plus valuation is the autonomous driving vision taking hold for Tesla, which appears to be turning a corner with its latest FSD version and now China FSD testing that is underway." Ives rates Tesla shares a buy and has a $275 price target for the stock. Morgan Stanley's Adam Jonas rates shares a buy and has a $310 price target. He is excited about the potential of Tesla's nascent robot business. Tesla is developing a labor-saving robot it trains using artificial intelligence-based computing. Quote, "Our thesis on Tesla is that it is both an auto stock plus an energy and AI and robotics company," wrote Jonas in a recent report. "In fact, our valuation of the core auto business is $67 a share. That represents just about 20% of our $310 price target." Although both Ives and Jonas are looking beyond second quarter numbers, the delivery result will still matter to some extent. Options markets imply shares will move 5% up or down following Tesla's delivery report. Shares have moved on average 3% up or down following the past 4 quarters. They dropped almost 5% after Tesla reported weaker than expected first quarter deliveries. So the options market is actually pricing in a larger move than normal for Tesla's Q2 delivery number. Now, in other news today, Tesla China has extended its promotion that allows new buyers to choose between a zero interest option and a zero down payment option for the Model 3 and the Model Y through next month. It previously was going to end on June 30th. Again, extending these promotions is better than cutting prices because at least this is boosting demand for Tesla. Tesla's FSD supervised V12.4.2 has started to roll out to employees. Elon Musk comments on this post and says, "Sorry for the delay. This release had far fewer interventions but suffered in driving smoothness. Part of the issue was too much training on interventions and not enough on normal driving. It's like a doctor training too much on patients in the emergency room versus training on preventative care. Our next gen AI model after this has a lot of promise, 5x increase in parameter count, which is very difficult to achieve without upgrading the vehicle inference computer. It's also being reported today that Tesla has secured a new $163 million megapack contract for a new battery in New Zealand. The battery will support new wind and solar on an intraday and intra-week basis and ultimately reduce reliance on gas peaker plants. And it's also being reported today that Tesla's latest version of FSD supervised V12.4.2 is now starting to roll out to some normal Tesla owners, non-employees in North America. Tesla has filed a new patent. This title of invention is, quote, controlling environmental conditions in enclosed spaces. And this patent explains an automated sanitizing system, potentially for a robotaxi, in part by utilizing UV light and steam, which after all, if you do want to create a robotaxi business, you probably have to have some way to self-sanitize the car. And that's probably one of the best ways to do it, is just have the air go through UV light and go through a steam system to filter out everything as the car is operating as normal. This is yet again another great sign that August 8th is going to have a lot of juicy details in store for us. Tesla has reduced the APR percent for financing in the US for an excellent credit rating. 36 to 72 month loans is now 6.29% from 6.49%, and an 84 month loan is now 7.39% from 7.49%. Tesla is also set to showcase the Optimus Gen 2 and the Cybertruck in China later this week. Also, in a recent interview with NBC News, Ford CEO Jim Farley said the automaker is shooting for a $30,000 Ford EV that will also be profitable, with production that starts in 2026. And Tesla is now suggesting only the Cybertruck Foundation series will be delivered through late 2024. The Greenfield, California Police Department has announced that several Tesla Model Ys will soon join their fleet. They say, quote, by going electric, we're not only reducing pollution, but also saving the city an estimated $15,000 in gas annually. We couldn't resist sharing a sneak peek of our futuristic Tesla Cybertruck prototype, complete with lights and sirens visiting. It is also being reported that Tesla Korea registered the highest number of vehicles ever in the country in the second quarter of 2024. It is also being rumored that after the end of the interest-free promotion, there are rumors that Tesla China may cut prices next quarter, but we do see today that promotion has been extended. So I would say this is just a rumor at best. Again, Tesla cutting prices outright does not do much to affect the actual financing cost of Tesla vehicles. It helps cash buyers more than anything. And when 80% of new vehicles on average are financed with a loan, you know, helping cash buyers, your 20% buyer market, doesn't move the needle much for potential deliveries. Here today, we came out with ISM manufacturing PMIs at 48.5. You were expecting 50, so that was lower than expected, and actually still in negative territory. Anything under 50 is contractionary. Anything above 50 for any of these readings is actually positive. So ISM manufacturing employment came in at 49.3. You were expecting 51. So that's actually negative as well. Construction spending month over month came in at negative 0.1%. You were expecting positive 0.1%, but last month was revised from negative 0.1% to positive 0.3%. So that was actually net positive. ISM manufacturing new orders came in at 49.3. You were expecting 46, so that came in really good. And ISM manufacturing prices came in at 52.1. You were expecting 56. So that was much better than expected in your inflation metrics for your ISM manufacturing. But yet, what is stumping Wall Street is, even though this was good inflation data, the 10-year Treasury yield is up 13 basis points today to 4.473%, putting a lot of pressure on the Russell, putting a lot of pressure on some areas of the markets, which again just makes Tesla's outperformance today look that much better. This rally in 10-year Treasury yields could be in anticipation of the data we get tomorrow, as well as the speech from Fed Jerome Powell, and we'll talk about that more in the next video coming out at 8 p.m. Eastern Standard Time tonight. Option activity from big money today via the interesting flow sentiment for Tesla. You have seen 42 different trades totaling $8.96 million with a positive order value of 86%. If you take a look at this Friday's expiration, you do have open interest of about 37% calls and about 63% puts. Volume today is about 60% calls and 40.2% puts. Tesla's short interest remains unchanged at 3.82%, with almost $21 billion currently sold short in the stock, and that equals about 106 million shares that are sold short. It is pretty fascinating today over on StockTwits. The sentiment is actually bearish at 44. Yesterday it was neutral at 52, and although Tesla stock is breaking out today, up 6.5% of the time of recording this video, that just doesn't make a whole lot of sense. So maybe retail's a little bit more bearish on Tesla today and institutions are more positive, which is kind of a flip-flop compared to what we usually see. Message volume is normal today at 48. Yesterday it was low at 37, and the participation ratio today is high at 56. Google Trends data remains very strong for the Tesla lineup. The Cybertruck hitting 75, the Model Y at 29, the Model 3 at 24, the Model S at 11, and the Model X at 9. This is all an uptick across the board for all of your Tesla products. And as I have explained before, this is really some of the highest Google Trends data we have seen in many years, which was the main reason, at least initially, I thought that Q2 deliveries would come in better than expected. And again, judging off of Tesla stock today and the fact that you have recently rallied big time, that would also suggest that Wall Street's pretty optimistic for tomorrow. Tesla is currently running about 4,000 different ads with Google. Global inventory numbers are pretty volatile lately, but recently have started to fall. If we take a look at Tesla on a purely technical basis, you are above your 200-day moving average, at least at the time of recording this video, which is at $205.92 per share. You want to stay above that into the end of the trading day today. If that happens, fantastic. If it doesn't, well, you know, we're still above $200. This is still a pretty impressive move, and I wouldn't think too much of it if we did close under that 200-day moving average, but we'll see what happens in the last, couple of minutes of the trading day. That's probably when we're going to get the most volatility for Tesla in general. Tesla's RSI is currently at 73.17, which is overbought. So don't be surprised if there is a little bit of a pullback coming tomorrow. But again, now that we're at $210 per share, assuming we close here, I mean, a little bit of a fall from here could just find us some support at that 200-day moving average, reset the RSI a little bit. That would be a base case assumption, but people are definitely bullish heading into tomorrow. And again, I think more of this bullishness is in the hedge fund institutional community. Judging off of StockTwits, looks like retail investors are still pretty bearish or negative on Tesla, at least today, which is kind of surprising. Took me back a little bit. Tesla's MACD line is at 6.31 and the signal line is at 3.67. So that's really what you need to know in regards to Tesla stock today. Let me know if I missed something down below in the comment section you think should have been included in this video. Give me your overall take down there as well. Hit the like button, subscribe to the channel. In the meantime, ladies and gentlemen, you guys enjoy your day, and I will see you in the next one.